Hi everyone, delonewolf here and welcome back to EVE Talk, your weekly look at the market in EVE Online. And as we make our way into March, the last month of the quarter, things are definitely moving on the news front. For instance, we have the Intaki system, which seems to be sort of a main base of operations for faction warfare for Galente. That has become a high-sec system. Very interesting, first time that we actually see, a system move into high-sec rather than out of high-sec, and I think this leads to speculation that CCP is potentially planning on having a dynamic system where the players, probably from faction warfare, can actually influence the security status of those systems. It is definitely interesting that this happened all of a sudden. It is part of the narrative arc, of course, and CCP basically just dropped a lot of information about all of this stuff. So we got a scope video, and quite interestingly, not only the Amar spying saga is sort of confirmed, and they were actually spying on their closest ally, the Caldari. So that's a little bit surprising, but that seems to be proven. But on top of that, well, actually that's not surprising. It is the Amar after all. They are the religious fanatics, the bad guys, easiest to paint as the bad guys. But then they're also sort of mentioning that Galente is coming under scrutiny for their activities in the Intaki system. And so the way it was actually mentioned is that the two largest empires seem to become more and more militaristic, and that they don't have any regard for anyone else. So as a result of that, this comes to me as a real surprise. It was mentioned that Caldari and Minmatar seem to be in talks about security cooperation, and so there is a bit of sort of a rumor, you could say, that's going on, that we might eventually move towards a faction system with Amar, Galente, and then the Caldari and Minmatar together. That could of course really shake things up lore-wise and in the game quite a lot. But that remains a lot of speculation. What we do know is that the Caldari are working on a shipcaster system that seems to be sort of a multiple choice gate towards systems, not necessarily to other gates, but just into very specific points in multiple systems. Very, very cool, and in my opinion also very interesting what that could bring potentially to the game and as goals for faction warfare. So that is technology that they are working on, and apparently they're working on building one of those in the Ottoman system, I believe, which is the one that the Caldari very successfully captured from the Galente. And I find it very interesting that the CCP is hinting at this Caldari Minmatar alliance, because while of course in lore-wise the Amar and the Galente are the largest empires, faction warfare-wise and player count-wise, it is actually both Caldari and Minmatar that are overshadowing their counterparts. So it's gonna be very, very interesting, and I'm eagerly awaiting more information on all of that. And for those that really can't wait, it's actually starting to go to the test server as well. We got a new mirror, so you're as close as possible to your TQ character, and the direct enlistment system should be up for testing at this point. Haven't gotten time to take a look at that myself just yet, but perhaps I'll try to do that if work permits, because, well, unfortunately, this month is going to be very, very busy for me in real life when it comes to my job. But overall, lots of developments, lots of stuff to try to understand, to try and take position and prepare for what's bound to come later this quarter. Next up, as always, we'll take a quick look at the New Eden store, but I believe, especially looking at what Plex has done, that we are past this sale, so we don't see any sales here on the New Eden store. If we take a look at the ship skins, nothing too special to report here either, and then services specifically, no sales to see here. So we get to move on to the market itself, and we'll go to the pilot services coming in at 420. There we go, and as always we start with Plex, and if we go to the chart you can see that we have basically survived very easily and very quickly on that Plex sale in the New Eden store. That does always drive demand and does drive the price up, but all in all that's not that big a move and that big a volume, although it was sustained for 5 days for a Plex sale. And then you can see how very sharply we drop back down to the same level we were just before the sale happened. So at at the moment there is actually still a bit of pressure on plex that I'm seeing, because if we had upwards pressure on the price, if we were expecting higher prices for plex, we would get stuck somewhere else and not at what we're seeing here. So most of them are in Jita are selling them for 4.9 million, buyers coming in at less than 4.6. Clearly here a bit of spread opening up by the buyers, and well, we get a little bit of activity in the Tranquility Trading Tower, but it is nothing all too major. And for the buyers, yeah, they're there, they're close, but they are not the most expensive buyer or the cheapest seller just yet, and that's probably an overflow here. 4569, 4568, so that's probably a little bit too much that was trying to be sold at this very specific price. But yeah, that's definitely a bit of spread that's opening up, and it is to the downside. It is apparently buyers that are not willing to go higher for plex. On the multiple pilot trade certificates front, we don't see that same story. We can see that the volumes though are really gone. Some days we have 0 or maybe a single trade. Yeah, there's quantity of 1, and that creates actually an upwards motion in the price. Still, we are at almost 2.1 billion for the sellers, and that's a very big difference from just a couple of weeks ago, in my opinion. 1.85 billion for the buyers. That is a little bit of spread that's getting closer and closer to that. Actually, it's very, very close, I think, to a 10% spread, something we haven't seen for a very long time in most pilot services. The skill extractors should follow the pattern of plex, and actually very interesting here as well. The plex sale, which we've already seen here, was, well, it was a decent amount of volume, but price wise not that much of an impact, basically shrugged off by the skill extractors. And what we're seeing here at the very tail end, we're seeing a bit of hesitation, but the general motion has clearly been downwards pressure for the last week, as the 5-day moving average is crossing the 20-day moving average down, and then the daily averages are below that for most of the days. Today's price, of course, still has to be set, but skill extractors coming in at 514 million, and then a 485 million for the buyers. A little bit of spread here as well, nothing all too major. I don't think it is that abnormal to have this what is it, 30 million. Yeah, that's still in line with what I think we had over the last couple of months. The impact on the injectors could be very interesting, as we are basically stalling, in my opinion, right here at the tail end. We are stalling at definitely like the highest range, probably the highest price point as well for the entire year, but volumes are starting to drop off. And so I think here the market is sort of signaling that, yeah, all of these high prices, that's nice and all, but we can't bear this forever. Large scale injectors are currently going for 955 million, almost a billion ISK for a large scale injector, and the buyers though coming in at 905. Yeah, that's just a 5% spread here. Still quite some demand, but I think the sellers are unable to really push the prices any higher than what we have here. And you can see that on that min max, right? Basically the daily averages for most sales happening are right on top of the maximum price, and so anything else has to go to these buyers. We're starting to, in my opinion, we're starting to feel a little bit of a top. On top of that, I forgot to mention that in the news, but we could definitely mention that here as well. We're definitely starting to see some rumblings when it comes to potentially war happening in nullsec. Quite a few screenshots from battles, destruction of structures, and things like that. So things are heating up here as well. It's an interesting time, in my opinion, for EVE Online, and I personally hope that the direct enlistment system will be interesting as well, with hopefully some of its own activities. Next up, we have the small scale injector. So we get a bit of pressure at the tail end here, and well, small scale injector still a little bit of its own thing, right? 20-day moving average staying below the 5 days. So here we still have basically upwards pressure for most of the week, and it's only at the very tail end, but again, that's today's price setting, which isn't done yet, that we are seeing some sign of pressure on that. 192 million to 181. That's pretty much a similar spread to the large scale injectors. For the daily alpha injectors, I would say CCP gets a bit of a breather, because just as everything else here is hesitating, and on that plex sale there seems to be a little bit of downward pressure in general on the pilot services. We can see 5-day moving average very quickly starting to stop its increase and then actually start decreasing as well. And it is, I believe, below the 50. So we are now at, well, 50 million for the sellers, but below 45 million for the buyers. That's over a 10% spread between those sellers and then the buyers. So that's actually significant. Another one where buyers, I think, are trying to push or bring the price down, pull the price down, I should say. Yeah, I think they might succeed if we can maintain this type of market in the pilot services for the upcoming weeks. Finally, we have the hypercores that are also showing signs of strain. You can clearly see here over the last week downwards pressure on this one. So has this opened up a margin? We are now below 500,000 for the sellers, 483 for the buyers. So here the spread, I keep sometimes going back to that margin mistake, but the spread here still not that big, but yeah, definitely a little bit of downwards pressure on the price in general for pilot services. Next up, we have the minerals, and that's coming in at 1055. And as always, we start with titanium. You may already have seen that on the ticker here as well. Pretty good news, I would say. We have a little bit of a change in the market, 5-day moving average crossing that 20-day and staying above that for most of the week. Daily averages on top of that as well, so that should mean slightly better prices. And if we go to GIDA, we are talking 411, 410 for most sellers and buyers. Look at that, 408. That margin is gone. And if you take a look or you keep an eye, one eye on the ticker as well, you know that Megasite is doing something similar. So here, this to me is one of those signs that indeed it's not just probably faction warfare, although some increased destruction can be expected there, but it's really Nullsec, I think, that is starting to gear up for action rather than farming, which could be very interesting and very lucrative as well for Take-Two ships, but more on that later. So titanium, bit of recovery, healthily above 4 ISK and very, very tiny margin. Let's see if we can generalize this. Here is pyrite, and definitely look at that very clear crossing of the 20-day moving average. Top side from the 5-day moving average every single day of the week. We're straight at the highest level here for the daily averages. Pyrite going up to 1115 for most sellers, 1050 for the buyer, so an easy defense of that 10 ISK range, and showing again that I think although volumes are down a little bit on this increased price, that there is this demand for minerals, and there are people that are preparing for the need for more minerals. And even Mexalon is turning the corner as well, and this is doing it on more volumes, so clearly something is happening, and it's bound to not be in HiSec. I think this is demand from Nullsec that is starting to show through, but what a change in dynamic. Very sharp increase, 5-day straight above the 20-day moving average, and look at this, today's daily average apparently make its way above the 60. 64 for the sellers, 61 for the buyers, and well, this makes me sort of happy with my recommendation over the last couple of weeks to go on a 50-50 basis if you actively mine in HiSec. Don't sell everything and wait for slightly better times. You already have better prices coming in through all of your HiSec minerals. Your ISK per hour has just gone up, and I would definitely understand, right, we're in this momentum. I personally wouldn't sell everything that I've put together over the last couple of weeks, but this is definitely the time where you can start to switch from just selling everything that you're making or something like that. Better times apparently for HiSec miners, and yeah, I think it's because of what's happening in Nullsec, which is of course very cool to see. Next we've got Lowsec, and Isogen is still slowly edging in the same direction. So let's try to get the full chart to be visible. Starts here at 200 ISK, ends well above 500 ISK, and now you can see that slow burn from the 20-day moving average starting to pull up here as well. Sellers are now at 561, buyers are at 545, and now on the front page we have no sell order that's above 10 million units, excuse me, and then we do go to 20 million waiting for us at 565, and then as we go up to even higher price, we get another 50, another 30. So well, maybe it shouldn't be that much of a surprise. It's been the case before as well, but these are, in my opinion, still old reserves that are finding their way to the market and are trying to get the best possible price, but it is helping with keeping the price relatively stable and while having a general outlook for the future, that should be a higher price for isogen. If you look at what's actively being mined and being consumed, we're probably looking at higher prices, but we are very slowly and steadily getting there at this point, with some hesitation here and there, right? Sometimes I think speculators will jump in and will spook the market, but those 20, 50, etc. million units are keeping us in check, and still we keep clawing at these and making that average price higher at this point. So we are seeing these reserves getting exhausted, and I think here still patience will reward you. Those that sell, again, I would have that that recommendation. I would basically slowly keep selling into the market and actually selling in batches of volumes that don't spook the market too much, which is mostly what we see happening here. So more upwards pressure for isogen, and I think again patience is the right answer here. Next we have Noxium, that actually is, well, sort of hesitating, but at least not going down even further. We are talking 887 for the sellers, 850 for the buyers, pretty narrow margin here, and volume wise you can see the difference. You get a couple that are managing 5 million and more, but that is it. So this is really the price for active mining and active selling. I would keep this one in mind though. We are talking 900-ish for Noxium, and on a very good period, though it can make its way above 1,000. That is possible, but I don't think that we can expect isogen to make it to the same range. So while it still, in my opinion, has to go higher, I don't think it can go to like 900-ish or something like that. But the 600s, I think, is definitely a possible high point for isogen, where we will start to find this balance. Then we have nullsec, which means Zydrine, that is continuing the increased price over the last couple of weeks. Again, for me, another signal that nullsec is preparing to move away from farming the fields to destroying and to getting into a little bit of action, a little bit of plateauing at the tail end here. There is only so much that the market here can bear. Of course, in high sec, 2,360 for the sellers to 188 for the buyers. And then if you spotted it on the ticker, you can see that Mexalon is doing the same thing and getting back to the highest range of the year at 2,760 for the sellers and 2,700 for the buyers. That is a narrow margin, and I think here it is a nullsec story where there's less supply coming. They need everything they can get for their war preparations for their own industrial facilities, and that means that in high sec we are paying the price. The main reason why I think that is all of this Mexalon, that's not all of a sudden a need for production in high sec. In my opinion, that is being brought into nullsec in order to keep the factories burning and to basically get emergency stuff out and ready. So very, very cool, and a sharp change all of a sudden, I think, in the tone of the market. And I think what really becomes the unpredictable factor in all of this is the direct enlistment excuse me, direct enlistment system that is planned for the game. All of this could make for a very interesting few months towards the 20 years of EVE Online. I think it is idle hope, but could you imagine if CCP drops an FPS announcement at that point? I think it would be a very interesting time for a new Eden. Finally, we have a Morphite for the minerals. That's actually quite reasonably staying above and below on the daily averages, that 40,000 ISK mark. So not too much moving here. 40,500 for the sellers, 39,000 for the buyers. We do see higher volumes. I think again potentially more preparation for the need to replace stuff and thus the need for raw materials. Moving on to the PI market, that's coming in at 1850. That could be very interesting, because if I'm right and this production is in nullsec, despite the fact that we are already at 1 year high points for most of these advanced moon materials, for instance, the most complex stuff that's needed in the large ships, this should just get even worse. So let's see what's happening. Here are the broadcast nodes. No, that is not the case. Look at that. A little bit of surprise here to me, but we are clearly also turning the corner here. 5-day moving average crossing the 20-day and then stabilizing at the current range, with volumes down substantially over the last 10 days. 2.4 million, 2.3 million for the sellers and almost 2.2 million for the buyers is still very, very high. I mean, we're basically matching the last high point for the 5-day moving average. So where we go from here will be interesting, but I thought that when we see all of this increased demand for minerals, when we see what's happening potentially in Nulsig, that they would not let up. But yeah, even here there is only so much the market can bear. Very, very interesting. Construction blocks though are confirming that trend. You can see those max prices basically at the high point. 5-day moving average, same story there. 11,700 for the sellers, 10,600 for the buyers. And this is, well, we're running out of stuff here in JITA. Basically, they need a hell of a lot of PI. Next, we've got coolants, almost the same story. We do have a higher high point here in September, but highest point for the last 4 or 5 months, very clearly so. And this is actually still widening, that 5-day moving average staying well above the 20-day. We're reaching 12,300 for the sellers, 10,900 for the buyers. So on this one, for me personally, as you guys know, it is in January where I pulled the trigger on most of my PI, and since then I've just been in selling mode. And it is possible that I've been a little bit early, but I can still basically recommend it. Looking at this chart, if you're making PI, you can definitely bring it to the market and selling. You're getting the best is you've had for a very, very long time. Then we've got enriched uranium here that, yeah, just continuing the trend for the last couple of weeks. Not yet at the high point, right? 15K, I don't think we're there, but it is 13,000 for the sellers, 12,250 for the buyers. So strong demand, very much a big gap here between 5-day and 20-day moving average. Will start to slow down here, but very, very expensive PI. Then we get our integrity response drone starting to crest as well, but again, still the highest price point for the year at 3.25 million. And 3.15 million for the buyers. That's a tiny spread, between sellers and buyers here, so showing that that demand really is there. Our mechanical parts are stabilizing for the week. 11,700 though, great price. I think we can go through the list, and unless we find something really shocking that this will just become the trend here. Our miniature electronics, very, very pronounced 1-year high point. A refined PI material that's now selling at 19,300 disc, 17.3 for the buyers. Bit of spread here though, to 2K. That's above 10%. That is not insignificant, but it is showing, I think, that we are in an extremely expensive PI market. And then we do have that story that's coming through here as well. It started last week already. A little bit of a pullback again for nano factories. 5-day crossing the 20-day moving average here. We are still talking above 1.5 million for the sellers, 1.3 million for the buyers though. A little bit of a spread there, but that is still the best price for the entire year, or the highest price of the entire year. Organic motor applicators building even higher here. We're talking 1.2 to 1.1 million. Again, highest price point. Recursive computing module had a little bit of a slump, and this is sort of what I was more expecting more of across the board for the advanced PI materials, but yes, it's shooting up here now, back to the highest price point for the year on the daily averages. 5-day moving average still has to catch up, but again, look at how close we were here, right? We crossed it, and then we hesitated for just a moment, and then someone came in and said, I need a lot of recursive computing modules, and that shot the price up towards 175. Sellers coming in at 165 million, buyers at 1.4 million as well. 1.4 million is way above those minimum prices. We're basically rematching this January peak right now, and this at a much faster pace. So super strong demand. Robotics staying quite comfortably above 90,000 as well, 96 to 91, so very expensive. Rocket fuel, slight pullback again, but from where? From a 1-year high point. We are still at 15,600 for a refined PI material, 14,000 here for the buyers. If that's not a sign of desperation, I don't know what is. And then that's more in line with what I was expecting, if my story that is correct, that this is basically a nullsig arms race that is really gearing up, and that might even be gearing down in its supply, its domestic supplies here. And then we get this self-harmonizing power cores was last week at a 1-year high point, selling above 2.5 million, at almost 2.9 million, and we thought these are incredible days, and now over just a week we're at 3.3 million, and buyers are forced to 3.2 million as well. So obviously, if you have some self-harmonizing power cores lying around here, this is an incredible time to turn that into liquid disk, and basically at any time before this when you bought them, you are making a massive profit. The smart fab units had this 1-year high point to 150,000, which of course for most specialized PI materials was quite unusual and doesn't have the volumes to really have a sustained price, but we're still talking 91 to 82,000, which is not bad. Sterile conduits, very stable at 1.4 million. We got our supercomputers that were at a 1-year high point last week and are only now starting to give up on that price range. That's also right. Look at, we're giving up, so we are coming down. So there is some supply coming in, but despite the highest price range for the year, we still have very, very high volumes here in the last 5 days. Synthetic oil. Well, same story here. Refined PI material going for 14 to 15,000 disk. Synthetic synapses, another 1-year high point, 135k here all of a sudden. Look at the volumes as well. Transcranial microcontrollers back well above 100,000 at 115. Finally, we get our water-cooled CPU that is holding on quite nicely at 9,500 disks. Now, compared to coolants and everything else, right, for this refined PI material, this looks really bad, but look at where it comes from at a price range of less than 5,000 disks. And then finally, we get the wet-wear mainframes that sort of, I think, confirmed the theory. Another 1-year high point on the daily averages, 2.9 million a piece. And I will again give that same warning that I've been giving for a couple months at this point. I think especially if we look at the self-harmonizing power cores, it is becoming more and more clear that after CCP fixed the bottlenecks for some of the minerals like megasite, zydrine and isogen, and despite that we're still at very high prices, the next real bottleneck that could potentially be on their radar, in my opinion, is PI. If you get a 1-year high point that was building for 2 weeks straight and then you still shoot up another, I'm not sure what percentage wise this is, but it is a lot. This is really showing, I think, that this is the next bottleneck, and CCP might want to intervene at some point because, well, let's be honest, this is very nice ISK, but it is also very passive ISK, which is counter to the general philosophy that CCP has been trying to develop for EVE Online. That is that it is flying in space that makes you ISK. It's not setting stuff up and letting it do its thing. So be careful, and I would again say this is an incredible time to be selling your PI, and I personally am selling everything that's not bolted down. Everything that I can find, every little piece of PI is going to go to the market at this point because, well, big changes are potentially coming with what's happening in NOSIC, with what's happening with direct enlistment, but a path for balancing could definitely be part of the plan at some point. Next up, advanced Moon materials, 2750. Let's go through the carbides and the crystalline carbonite. So this also against my longer term expectations. What happened here in December was basically a 25% nerf of the output of moons in EVE Online. So again, what I was talking about for PI, but then what actually happened, CCP intervening into the market, wanting to defend the value of moon mining. And what I was expecting was more volatility. But we can see here now, basically we've recovered and we are back on a very stable path. For instance, crystalline carbonite, just below a 150, and that is it. It's just not moving a lot from here. If we go to the Caldari one, which is titanium carbide, we have a slightly increased price for the year, and for the week as well, I should say. But what we should mention, of course, is that from what we know from advanced Moon materials, the Caldari materials have always had a bit of a premium on all of the others. So this 165 price is actually not crazy, and I personally think that will end up stabilizing at some point above the Galiente one. Although direct enlistment could change that if, for instance, all those 0.5 systems with moon mining could get challenged and could become low sec, so that you can really disrupt those types of flows from the other empires. That could potentially be very interesting, of course. Then we have Minmatar, which is Fernite carbide, again stabilized after gaining a little bit from that 100 disk range, 115 to 109. Biggest problem for this one is, I think, that the Minmatar heavy assault cruiser basically was nerfed quite heavily, and so while Minmatar had this potential reason to have a higher price, this premium on Ferrite Carbide, that is basically gone. And so now it's all about player numbers, which, oh, that's actually true. I may have made a mistake there. If I'm not mistaken, Minmatar is the least populated, not just the smallest and youngest empire, but also has the least amount of players. So I could have been wrong on that. And Caldari then has the most, so yeah, it's going to be interesting to see what they'll do faction-wise here. But yeah, they had this premium because of their heavy assault cruiser, and they lost that. Next we have a Mar, which is for tungsten carbide, that again, after one blip, is basically stable at the gains of around 150. So 160 now for the sellers, 152 for the buyers. And then where I actually placed the bet was the metamaterials. So we'll start with Galente, that is photonic metamaterials. I do have a gain, but basically we recovered back to the 10,000 disc range, 10k, 9.8k, and well, I think again I'm now at this point expecting less volatility rather than more, unless again Nelsec direct enlistment. I could be wrong on that because of what's coming down the pipeline, but so far we've basically very easily absorbed that nerf. For Caldari, it's non-linear metamaterials, has a couple of spikes, but they don't last long, and you can clearly see that we don't have that much in gain. We haven't gained that much in value, 13,260 to 12,000. That may have been the story. Well, actually it was a blanket nerf, 25%, so no, there's no micromanagement to be found there. Plasmonic metamaterials for Minmatar is, well, basically away from the bottom as well, settling at 12.4 as well. And then for Amar, is this one. By far the most stable one, probably because it's further away. Well, actually, further away from Jita. Why would it be more stable? 13.8 to 13.7. That is a very, very narrow spread here. Very stable price, right in the middle of everything. So, well, CCP did succeed in regaining value, or increasing the value of what's coming down the pipeline after moon mining, so that should be reflected there as well. But overall, no big disruptions, which may have been the whole point, of course. If we look at the other advanced moon materials, here's fermionic condensates, right, again away from that bottom, but nothing too special. One big speculative bubble here in December, and then basically the market shrugged everything off. If we look at ferrogel, we're actually building back to a full recovery on this one. 26,000 on not a lot of supply, 25,000 for the buyers. That's pretty impressive. Then we get Fullerites. All right, our first big change, and again could be the rumblings of Nosec that are starting to come through here, expecting that this will cause some problems for moon mining. But Fullerites pronounced 1 year high point, 950 for the sellers, 770 for the buyers though, so this could get plugged very quickly, but it is our first little touch of volatility in the advanced moon materials that's really out of the norm. Fullerites had done its full recovery very quickly, right, straight up here from December, fully recovered in January, and then had stabilized, and now our first real jitter away from all of the others, a pronounced 1 year high point. That's interesting. Hypersynaptic fibers though, again stabilizing at that range that they gained in December, so not much to say here. Nanotransistors, a bit too much here in December, and then a little bit of a gain compared to the bottom prices. Phenolic composites doing a double top, but already stopping, so I think we will get to 1500, almost there for the sellers, 1485 for the buyers as well. That's okay, 1485, so that's a very narrow spread on a very high price point for the last 2-3 months. It's going to be interesting to see if we fall back sharply or if we can stabilize here and thus consolidate the price gains. Then we get pressurized oxidizers, 1 year high point yet again. Reinforced carbon fibers, well, building up to the same thing. Interesting. And then ceramic fibers. All right. Advanced materials coming out of the woodworks. 500 disc for ceramic fibers. Another 1 year high point. Perhaps I need a little bit more patience. I think again this is a sign that where the market is expecting action should be in nullsec, that there's some real signs that there will be another pretty big deployment and war happening there. So very actually interesting. I'm a little bit surprised to see this many breakouts in the other advanced mode materials, not in those tied to the production of faction-related Tech 2 ships, which is our next segment, of course. Tech 2 ships coming in at 3450. And this is of course potentially then that perfect storm. If nullsec can explode into action and lots of ships destroyed, then my investment, which is where I put most of my eggs, is in Tech 2 ships. We could get the time to sell coming at that point. So we'll see, but let's get through the list at this point. And you can see here that for the Basilisk we had those massive gains over the last 2 months, coming back to 180, so a full recovery. And definitely, I think last week I said, if you want to take your profits, you can definitely do so. And so you can see that some people basically listened as the price is down a little bit, but 163 to 131 compared to the bottom prices is still nowhere close to those bottom prices. So I think the market is also gearing up for more expensive Tech 2 ships, and so I'm hoping that nullsec can bring in those emergency buying sprees and does those real 1 year high points, pronounced 1 year high points, and sell opportunities. The Cerberus very flat, shrugging everything off. I'm not sure if it's still in the meta. I know it used to be in the meta. 140 to 128. It's basically again away from the bottom prices. Has gained a little bit, but not a full recovery. So if there's one that I would expect, for instance, to be able to shoot up, it would be the Cerberus. Next we've got the Curse, another step up for this week, basically fully recovering as well. 174 million for the sellers, 158 for the buyers. So again, if you bought at these bottom prices, you are already looking at a nice profit. But I'm going to hope for like a desperate buying from nullsec to shoot us above everything on the chart, above 200 million. That's where I want to try to sell. That would be amazing, of course. Damnation also again back at that 350, so we're talking 428, and we're running out maybe here. Amar prepping, look at those max prices, making its way very close to that high point. If we get like another week of that, maybe I should try to sell, but we'll see. It's gonna be interesting. This could be a very interesting one to decide on your selling strategy when the volatility does hit, because we're basically, when it's happening, right, JIDA and the surrounding systems, I think we can take a look at that, yeah, and the surrounding systems are basically running out of damnations, and sellers coming in at 428. You still have this on the max price as well, so people are desperate enough to buy these damnation at these prices. But by next week, the question is, are there enough speculators and are there enough ships ready to really bring that price back down? So do we have to pull the trigger at this point already when the 5-day moving average hasn't made it yet? Or can we afford to wait a couple of days and see if a second breakout is not possible? So interesting damnation market. Definitely, I'm definitely going to keep an eye on that one. And in next week's EVE Talk, the chart then should tell us a lot on how we can potentially look at selling at the best possible prices. Then we've got the Deacon, again stable at its gains, 19 million, 17 for the buyers, not much to say. The Eagle continuing its slow ascent again to a full recovery around the 180 mark, 181 to 175. So if you bought, I think you're very happy if you bought down here at the 130 range, and you can start to sell if you really want to, or you can try to take the gamble and get one of those potentially sharp increases. The EOS also starting to go back up, so another command ship. They do need those, of course. Back at 300 million, which is again fully recovered from about a year ago. I think, well, it's actually started at 350. But you can say that 300 million was the average for the first couple of months. Then we get the Ares, basically back at 50, not much to say on that one, 55. And then the Flycatcher, finally the Flycatcher is moving. I think I mentioned this last week and in the months before that on a couple of occasions. But if you still wanted in on the Tech 2 trade, then the Flycatcher was still in that position where basically it was still hovering at its bottom prices. And you can see here at the tail end, couple days of volumes, and we are starting to pull back up. back at 54 million for the sellers, and buyers, they're hesitant, right? 38 million, but I think eventually they'll have to give up here. Then we've got the Guardian that also basically fully recovered, 177 to 146. So a sell opportunity if you bought at the bottom prices. But is this really a top? That's the hard part here. The Heretic showing a little bit of signs of fatigue after basically pushing that minimum price up for a couple months straight. We're now at 42 million to 38 million. That's not that big of a spread either. So basically you're too late here to jump in on the best buy prices, and I think this is not the time to be selling just yet. The Hound starting to push up a little bit, but that's not the volatility we want. Almost 20 million. That's not enough. Then we get the Iquitursa, definitely an inflection point here as well, coming in at 530 to 475. I think you even have, if you manage to buy like those minimum prices down here, and you can see as long as that 5-day moving average pulls away from the 20, daily average stay below that, this is the time to strike. You could have bought well below 500 million at that point, and now you're looking at 530 for your sell price. So there is trading to be done in the Triglavian ships. They are, I mean, we're talking tens of millions very quickly, but it is of course gonna cost you $500 million just to get your foot in the door. Then the Ishtar continuing to stay at around the 180 million mark, 190 actually now for the sellers, 165. So again, if you bought here August, September during the slow summer, which was really the time when I was constantly looking at those 1 year low prices, you have a very nice profit already. And for the Ishtar, I personally think that it would be okay to be selling here to take your profits. Just get them off the table. It is quite nice. Buy below 130, sell for a 190. It's not bad. I'm not sure if the Ishtar is going to be that disrupted by Nulsic compared to everything else. I think because it has such a big PvE component to it, I think the Ishtar tended to remain a little bit more stable and less likely to spike compared to, let's say, stealth bombers, command ships, or logistics cruisers. And maybe we'll see logistics frigates as well, as the Kirin is climbing as well. Not yet fully recovered. Start the year at 25, we're now at 20 million. But again, the bargain prices are over. The Manticore is making its way to a higher range here as well. 23 million now, still 19 million for the buyers. They're trying to keep this below 20, but I don't think they'll succeed. And then even the Nemesis is starting to move in that higher range again. Like I said, if this is indeed Nulsic preparing for stuff, stealth bombers make sense, logistic crews make sense, command ships make sense, so that should be the Nighthawk next. Nighthawk actually still not fully recovered, currently selling for 307 though, so that's at 300 million for a command ship instead of below 250. Buyers 273. So I would again wait if enough people, if a big enough engagement happens, enough people require their new Nighthawk, that is when you will see a real spike, a 1 year high point. That's when I'm looking to sell mine. The Oneros, right, had this first spike up to 200 million almost, so that's quite significant. That was a very pronounced 1 year high point, definitely the pattern that we're looking for. And you can see here we are just not gonna recover down on all of this. 164 now to 124, so not, in my opinion, a war spike just yet, but definitely, you know, prep volume that's being brought in from Nulsic in all likeliness. Then we get the Purifier, also again moving to the high end of its range, 24 million, not that many available. Then we get the Rook, that's moving back down a little bit. Recon ship 164, I think it has its uses, but of course buying below 150, that's not on the books anymore. Saber, then, now the interdictors might be coming into view. This was also one that was still pretty damn low, so you could have maybe bought like about a month ago, and now we're looking at a 46 million, so not a 1 year high point just yet, but clearly higher volumes, and not even that much higher volumes, pushing the price back up as people are preparing ships and fleets for what's to come. Scalpel still not moving that much, 17 to below 15 million. And I'll be honest, if you still need that Tech 2 gamble, if you still want to try to find a way to buy now and then to potentially sell at a profit later down the line, I think the logistics frigates are still your opportunity. They are frigates, so they can be moved very quickly. Big volumes can make a big difference there, and these really haven't gained that much from their bottom ranges, so that's where I would still look if you're still looking to buy. Then we get the Scimitar. You can clearly see that one has basically fully recovered. 162 million for the sellers on that one. Sleipnir could still be an option at this point. Unfortunately, we're basically a week late. As you can see now that the daily averages have started to go back up. But last week, Sleipnir at around 250 was still okay. We're 280, 254, and you're not going to get a competitive buy order considering what's happening in the chart here. So just too late, but that would still have been an opportunity. And then the Vagabond is apparently doing something really crazy. Let's take a look at this here. 160, currently selling for 160. So it's probably either the today's bug or a sale happening somewhere in another station in Jeddah. And then we get the Zarma, so that could then of course be RMT related, but we'll leave that to CCP to investigate. And then this one is interesting as well, in my opinion. If again you're looking for that bigger gamble, we get the Zarmas that I think is gonna touch close to 400, 407, 439. So you have an opportunity at this point. Look at where the daily averages are, still going down. You have an opportunity at this point to buy a Zarmas below 410 million. Your buy order is still likely to trigger considering the chart, and then selling at above 500 million, you definitely have potentially a profitable Zarmas trade for those with, well, deeper wallets and willing to take the Triglavian gamble in Tech 2 ships. Next up, the Tech 3 ships, and that's coming in at 46.15. As always, we start with the destroyers. It could be interesting if Nullsec decides that some tactical destroyer fleets are on the menu, but so far I think the story that I've been telling is that this has been very, very stable, very low volumes, because the pullback in prices from Tech 2 over the last maybe couple of years has been so great that the value proposition of the tactical destroyers just isn't there anymore. And so despite what we're seeing in Tech 2, in minerals, in PI, in advanced movements, here we have the Confessor that just on a slightly bit of volume is able to come back down in price. Very slow, very steady, 48 to 44 million, and probably because here we got almost 100 ships being brought in. That just way more than what the market can handle or what there is demand for at the moment for these ships, and so you get this slow burn back down. And I think here we'll just start to flatten out yet again. That's really not the chart you're looking for if you want to trade and make a profit. The Hecate, bit of a weirder chart as volumes did shoot up a little bit here, but we are talking 57 million to 52. So I think, well, actually, yeah, it became a little bit more expensive. Perhaps the Hecate still has a value in certain cases, also definitely better on the volumes. So way below 100 for the Confessor. Here you can see Hecate still trading at around 100. So I think for like brawling fleets, the Hecate might still have its place, but I still don't like it again for trading. I think all of this is a little bit too slow, too steady. And it feels quite risky. Jackdaw then 100 a day as well. Again, not much to say on this one. 54 million to 51 million, very slow spread. If you look at the last 24 hours, we're talking 4 sell orders, maybe a couple more down here. Some volumes, they're basically keeping this market well in check. I think those minimum prices starting to go back up again. So we're just meeting at that 55 million range, and that is it. I don't really see that well how you can make a profit in all of this. And then this vehicle is also just slow and steady, 51 to 47 million. Volumes are terrible and we're not moving much. In fact, you can see minimum prices slightly up, maximum prices slightly down. We're just meeting in the middle, and that is it. Very different story though in the cruiser markets. So here is the Legion, and that's what you're looking for if you want to have a little bit of potential big profits here. So buy well below 200, sell at 250. We're coming back down. We're still very expensive, of course, 215 to 200 million. But even before this, you can see here, you could have bought at like 160, sold at 200 million, bought below 180, sold again at almost 200 million, or sold here at 200 million. And now we get another nice surprise spike for the Legion, which if you looked at the ticker, you may have seen something similar happening for the Tengu. So the strategic cruiser definitely still on the menu, I think, as part of the meta, an important part of the meta. And at this point, yeah, the place, in my opinion, to set your bet. Here you can see the Loki chart. So these are nice high points and low points again. Here, here, here. So this is what we're looking for. A little bit more stable in the last 2 months or so. Currently 200 million to 184 for the buyers. You get those minimum prices. You can see here starting to see a little bit of pressure that if we can get close to 180 or even below 180, that's like for me, I'm gonna buy a Loki, and then a 200 million sell is not a problem, and maybe even better considering what's happening with the Legion. Next here is the Proteus, also just coming down from a high point at 250. So Proteus, least popular one, so a little bit more stable, but again here buy below 180, get quite an opportunity. Then here 240-ish probably, buy at 180, get another sell opportunity, get another sell opportunity. This is way nicer, and at the moment the Proteus is still at 236 to 207, so you can definitely still sell at a nice profit, but buying is unfortunately not what's happening for Tech 3. And then here we have the Tengu that is working on a spike right now. 220, oh, it's already coming back down. Look at that, 222 for the sellers, 208 for the buyers. So while the jumping point is not that visible, right? We would have loved to jump in at 180 for most of these strategic cruisers. We're now talking most of them being well above 200 million. We may have to look for a new low price point. I think with nullsec that with what's potentially happening in nullsec, that these strategic cruisers could also still be those to be trading rather than the tactical destroyers. Maybe the Hecate could be an exception considering its daily volumes, but that is it. Still very interesting times in my opinion, and I'm sort of hoping that all of this, right, minerals up, PI, crazy prices, advanced movement materials, couple of 1 year high points showing up all of a sudden as well, will eventually roll over into the ships as well and create some nice sell opportunities. And then for the extra product for the week, I actually got an Eve mail to look at the ice products. All too happy to do that, coming in at 51.55. Like that. So manufacturing and research, I think it's materials, and then ice products. There we go. So I think we want to start with the isotopes, which was what the suggestion mentioned, that these are actually doing quite nicely. So you can indeed see we've moved to a higher range for helium isotopes, currently selling for 635. Buyers are at 557, still a decently healthy spread, but you can see above 650 for the sellers is basically the highest price point of the year. Moving on to the hydrogen isotopes, we of course have another spike, not a 1 year high point just yet, that was happening here in January, but we are above everything else, currently selling at 555. Then we have our nitrogen isotopes, also did a bit of recovery, right? Both in December and in February we had price of around 600 ISK. We recovered from that, but now at the tail end in the last couple of days, 612 for the sellers, yet again 590 for the buyers as well. And then oxygen isotopes, the biggest winner I think here of the isotopes mix, coming in at 650 for the sellers, 583 for the buyers, but most pronounced 1 year high point of the bunch. And this is of course another sign that the action is getting ready in nullsec. Isotopes, if I'm not mistaken, are fuel, and so that's a sign of deployment of large capital ships being moved around in preparation for stuff. Of course, they still have to pull the trigger, but it is very, very promising, and these isotopes are another sign that things are brewing. Next up, we have our other ice products. So here is heavy water, so that's way more stable, actually right around average, I would say, with a good couple of months here starting in November, but we're basically recovering from whatever happened there. 130 to 101, not much to say. Our liquid ozone, same story, right? Nice December, January, pretty high prices there, but we recovered back to an average. 117 on that one. And finally, strontium, very stable as well. I'm not sure what strontium is used for, but you know, it used to be what fueled our pulses, the old star bases with the bubble around it, and it's not used as fuel for the current structures, and so it lost that niche. So it has that stability built in at this point, and a deployment. You know, even if they set up structures as part of their deployment, which they definitely do, offensive structures are a thing. You know, it's not like it requires huge amounts of strontium. Back in the days, that was the case. Set bosses on all moons and all of that, those types of tactics, and that would of course require quite a bit of strontium. But this one, very, very stable. But the isotopes are clearly also pointing signs at preparations for nullsec deployments. So thank you very much for that suggestion. Yeah, very, very interesting times in my opinion. Looking forward to what's coming next. And if you guys have the time, of course, take a look on CC, take a look at the direct enlistment and help testing it. The more we can do that, the better CCP can deliver the feature when it will hit the actual live servers. So yeah, that's it for this week, guys. Thank you very much for watching, and as always, I'll see you next time.